After an incredibly red week, the market bounced a little bit and then proceeded to drop pretty hard to close out the week. Riz and I are going to talk about what to expect this week with some major market catalysts. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our weekly Elite webinar. Now, if you want to get the most unbiased market information, then you need to do me a favor and get down there and smash that like and subscribe button. Leave us a comment and click that bell icon to get notified every time we upload a new video here on the Riz Elite YouTube channel. But Riz, we have had just a wild week. You know, Monday and Tuesday, there was a lot of indecision in the market, especially on Monday. It was up, it was down. Tuesday looks like we might have recovered a little bit, and then Wednesday and moving on, we just saw nothing but red for the most part. So, Riz, what is going on here?
Oh boy, yeah. So big sell-off, big pullback. The market has significantly pulled back below that 200-day moving average. I mentioned that that's a key area. If we go below that, look out below 4,100 is what I mentioned to elite members as the next support area. We can see that in April and May, that was a consolidation area. That's very much going to act as a little bit of a support this week. So keep an eye on that. Just the ability for the market to sell off this fast and furious, I should say, is not something I didn't expect. I was expecting a pullback, as everyone knows, but not at this pace, right? And it continues, which is a bit alarming. So this is, and I think it was last week or the week before, I said, look, there isn't a precise reason for the pullback, and of course we've actually gone lower since then, as we can see, and it continues to be predominantly a technical sell-off. So yeah, there's narratives of the intensification of what's going on in the Middle East. There could be a whole bunch of other things, like there's some profit taking, but ultimately this is more of a technical pullback for technical reasons. Why? Because look at how the trend line you had drawn there. Again, it's steepened. That actually has steepened, as you can see, over the past month. October has been a brutal month. Usually October is actually a bullish month from a seasonality standpoint. Again, past occurrences don't dictate future results, but October is usually a bullish month. In Q4 as a whole is a bullish month from a seasonality and historical perspective, but that does not seem to be the case thus far. There are some people holding on for a Santa Claus rally, so to speak, but we'll see. We're still a bit further away. Santa's still out there prepping, right? So I feel like we're at the point where what is causing it? Well, we were overextended. There were 7 stocks, the Magnificent Seven, the not so Magnificent Seven now, right? That have pulled back. And I feel like it was only a matter of time. I mentioned that those 7 stocks were propping up the market. It's no surprise that we had earnings also come out. The past 2 weeks, we're in full-blown earnings season. We got one more week of big earnings next week coming up, as we'll touch later. But clearly, those earnings made an impact, right? We saw massive moves in some of these companies. Like, look at Google. We had a 10% drop in Google, which was absurd, right? Like, look at that gap down, and then it went lower, right? It's a big drop in Google. We had major volatility in things like Facebook, Meta, a 10% post-earnings move. As Chris just showed, 11% drop. Beautiful. Thank you. We had a 10% intraday move in Meta post-earnings, right, in a single day. That's big for such a large company. So there's a lot of volatility. There's a lot of uncertainty, and these large cap tech stocks that were just leading the market have pulled back. And when you'll see that in the next sector analysis that we do.
Yeah, for sure. And if you take a look, guys, especially in the RSI here, I mean, currently the S&P 500 is almost oversold at this point. So we are touching that line of being oversold. So, I mean, we're definitely seeing it. I mean, look how steep that drop is. I mean, that's off a cliff right there, if you ask me. So, yeah, there's definitely a lot of stuff going on. Let's take a look at those market sectors like Riz was talking about, and just look at this rollover in communications and tech. I mean, just a huge dump with those earnings off of Meta and Yeah, and Google, excuse me, I lost my mind for a second there. But yeah, massive drop there. Consumer discretionary taking a huge hit as well. As you can see, everybody's following the market at this point. And that's one thing, that we like to stress is don't fight the market. And this is why. You see the market going down, these big name stocks just pulling that market down with it. Energy taking a massive drop this week, almost back to the zero line at this point, and everything else is just going down with it. It's pulling it down. Financials, healthcare, consumer staples, real estate, and utilities, all well below the zero line at this point. So yeah, this massive drop here in communications and tech, really bringing the market down, like Riz was talking about.
Yeah, and you mentioned energy. You would think, with the strife and the volatility, so to speak, in the situation in Middle East, you would think oil prices would be rallying, but they've actually, we'll touch on that in the next one, but they haven't. They've kind of been paired some gains, but energy stocks as a whole have dropped. We had Chevron release earnings. I believe Exxon did as well last week or so, and both decent, but they both took Chevron specifically took a decent haircut post earnings. So this is kind of that scenario where and we've seen it in the past, where even if we see decent earnings and decent guidance, nothing spectacular, but even decent is being punished,
Yeah.
right? And this is very, very indicative and reminiscent of 2022. Again, I'm not gonna go out and panic people and be like, yeah, we're gonna go below 4,000. That's not my gig, but I do recommend continued caution, just as I have been the past couple months. And I know I looked like a little bit of a I don't know, do I say to call myself an idiot or something? But either way, I looked a little bit like an idiot past couple of months. Like, Riz, the market's still going strong. Look at these stocks, Nvidia. Look at it, like just doubling this year and just going and going. And I'm like, yeah, I know, but just hang on. Be patient. This isn't reality. And here we are. Big pullback in most names. And you could see the impact it has on the broader market, broader sentiment, right? Everyone's downbeat. Everyone's like, oh my God, red. Well, this is what happens. Stocks can often take the stairs up and the escalator down.
A great analogy, and that's pretty much a classic one. You hear that quite a bit. Let's take a look at those sectors we were talking about here. Now, like you said, oil is really just kind of hanging out here, really not too much going on. We kind of came down from these highs here towards the end of September that we had looked at for pretty much all year as the highest we'd gotten on oil, which was right around 93.68 per barrel. And then we kind of came back down, and we've been consolidating right around this $85 level. And man, gold continues to just kind of go parabolic here, for lack of a better term, really pushing up back up over that $2,000 an ounce line. We'll see if we can make a test of the all-time high here, which is 2050 or 0.17, excuse me. But yeah, let's talk about oil, because I've of course I listen to other people as well to kind of keep an eye on what other people are saying, but people are like, oh yeah, oil's going to, $200, $300 a barrel and stuff like that. And I just kind of shake my head because, well, the economy just can't handle that. That's something that we've talked about before. And so Riz, why is oil remaining so calm at this point?
Yeah, so we've realized that the market is not really factoring in much bullishness yet, even after the the like I mentioned, the occurrences in the Middle East. And the reason being is that demand seems to be flattened out a bit, which is not unexpected. Remember, I say, look, we get into the winter months, it's going to be harder for oil to make those gains, even with any economic instability, geopolitical and instability, any of that sort in the Middle East or elsewhere. And we're seeing that. Yeah, it's not the fact that it's holding isn't a bad thing. Right. Yeah, it's not going to 100 or 110 or 120 like some people expected, but the fact that it's still holding is good, as we are well past the summer months, right? We're now in the getting closer, I should say, to the holiday months. We do know that demand is lower. We've seen imports and exports kind of just not make too much of a direction. We haven't seen much action or any news around the SPR, which is the U.S. Special Petroleum Reserve. We haven't heard if they've dwindled it down even more, or if they've begun adding to it, because we don't know that. Then they haven't announced anything. I doubt they have added anything at this point, or made any changes. Right now, everything is really, really on hold, especially with all the uncertainty and kind of this cloud. I think that's over. I think a lot of people's minds, right? Even just separating, stepping away from the market standpoint. There's a lot of it's like a dark cloud, I think. And I mean, it is for me,
Oh
with
yeah.
everything going on. But to each their own. But I feel like uh, it doesn't help alongside the market pulling back as well. But I will say the economy is strong. So you could see this reverse dichotomy of uh, we've had very, very strong GDP growth. We've had strong employment numbers. We have inflation that's coming lower. We have a Fed that's paused. So we are not looking too bad from an economic standpoint, macroeconomic standpoint so far. Well, I think what the market is now going to eventually start pricing in, after it priced out all the rate cuts for the end of the year, is now it's going to start pricing in potential slowdown in the economy. I think it's just catching up to that point. We've seen that once the Fed actually pivots, meaning they stop rate cuts, where they stop rate hikes, but then they actually start rate cuts, that's usually when the market actually drops further. So if you've been paying attention, we haven't even gotten to that pivot stage where we've just been holding. The Fed has just been holding rates. They haven't even cut yet. So if we go solely based on historicals, um, maybe there are lower lows in the future.
Yeah, no, it's a good point, talking about what happens typically when the Fed does cut rates. But, let's talk about gold here for a minute because, all the gold bugs are like, oh, this is it, now it's now or never. I hear this all the time. It's gold to the moon. Pick your, your meme that you want to use for that. But Riz, give us your opinion. What is really going on here with gold spiking like this?
We've got definitely a lot of hedging going on here. We've got a lot of people trying to move money around. Institutions, by people, I mean institutions. Taking a favorable stance to that over the last couple of weeks. A bit too much, I think. I think it's way overdone. Um, I'm not too big a fan, as everyone knows, of gold. Physical gold, having some physical gold, it's fine. Whether it's jewelry or that kind of stuff, that's fine. But holding gold ETFs, personally, I'm not too big a fan of it. It's fine if someone really, really is bullish, but we know gold hasn't performed as a hedge in the classical sense over the last few years. And I think there's better opportunities and better hedges out there if really someone does want to do that. So as far as moving up this like crazy level, yeah, it's a lot of institutions getting in. There was money on the sidelines. We know that. We know a lot of it has gone into um you know out they essentially left the market, right? We know that money's flowed out of different sectors and as a market as a whole, gone into cash, and we can make an assumption that some of it's gone into gold. We can make an assumption that some of it's effectively leaving shorter dated bonds and then moving into longer dated bonds. That's why we see bonds selling off, but then yields go up, right?
Yeah, absolutely. Let's take a look at the bonds here in a second. If I can get this toolbar out of the way, there we go. So yeah, we've had quite the move here in bonds or excuse me, the bond yields, I should say, to be specific. The 2-year bond yields obviously have been really holding right around this 5% area for most of July for the better part of that. And it really kind of cooled off. But what we've seen, we started to see the 10 and the 30-year really kind of climb back up, and we're seeing them all just kind of hanging out right around in this 5% area. The 30 years are now at about 5.02%, or if you want to be specific, 5.019%. And, the 2 years hanging right around 5, and the 10-year is lagging a little bit, sitting at about 4.8% on the yields there. So we definitely are starting to kind of come back together. It was before where we had this huge disparity between, the 2 years being, riding so much higher than the 10 and the 30s. Now we're kind of starting to get things back towards where these are fairly close together. So definitely quite a change here in the last month or so, I would say.
Yes, you're right. We've actually seen them hold up pretty well. You can see that massive just coming together of the three bond yields, and nothing too concerning yet. But the fact that the Fed has paused and yields are still holding up relatively well tells you that uh, look, we're in an environment where the risk reward is still not too favorable for equities, right? From a risk premium standpoint. Um, and I feel like the higher that bond yields are, the more opportunity it gives others to have that risk-free rate of return that's reasonable, right? Like a 5% annualized return, relatively risk-free is quite a significant pop when you compare it to just 2, 3 years ago, right? Where you could probably get like 1%,
Oh
maybe
yeah.
1.5, like on a special high interest account. Now, you can go in and get a CD or just 5% high interest account. You're good.
For sure, for sure. And all those gold bugs saying that the dollar's going to die, it doesn't look like it to me. Dollar holding pretty strong here in relation to the other currencies out there. Not quite as crazy as we're going towards the end of last year in October, but definitely very respectable. Despite all of the instability in the market, the dollar seems to be holding very strong at this point. Riz, is there anything else we need to discuss with that?
No, like you mentioned, US dollar continues to hold up, and I think whenever we see any geopolitical uh uncertainty, the US dollar oftentimes is like that safety, that rock, so to speak, and you can see that happening here, right? So far, anytime it comes to flight to safety, anytime it comes to that reserve currency, that stability, the US dollar has been that, and it's going to continue to do that.
Absolutely, definitely a more of a safe haven asset, and yeah, they're coming here if they need it. All right, so for all of our members here, who haven't posted their questions yet, I see we got one from Dylan already, but everyone else who's here on the live webinar, go ahead and post your questions up for us while we go ahead and take a look at the important dates in the market this week, and we've got some freaking big ones I was alluding to earlier. On the first, we've got it's interest rate decision day. So that's going to be a big one. Right now, it looks like the forecasting a hold. I think honestly, that's pretty accurate. If I had to put money on it, I think yeah, they're probably going to hold here. And then on Friday, looks like we've got the unemployment rate announcement, and that'll be a big one as well. Again, it looks like they're thinking it's going to be a hold here, no change. We'll see if that's actually true. That seems a little bit I don't know. It seems a little presumptuous to me to think that it'll stay exactly the same. I think it'll be a little different one direction or another. And then, of course, we got job openings on Wednesday as well before we have the interest rate decision. But yeah, Riz, I'm guessing you're going to be watching the market on Wednesday pretty closely.
Yes, yes, like every day, but especially more closely on Wednesday, especially in the afternoon, and then as Powell chats or says something at 2:30. But you're right. We got job openings, Fed rate decision, we got payrolls, right? Look
Yep.
at the payrolls numbers, right? Like it was
Oh, that's
crazy. We had
big.
crazy payroll numbers last time around. It was like wow, like a lot of people, are getting employed. The payroll numbers are good. They're strong. The economy's healthy. The purchasing power, the spending ability for the consumer is there. And again, this time it seems a little bit more reasonable. But the unemployment rate, like you said, I doubt it's going to be exactly, but yeah, roughly. I don't think it's going to change too much. These things we see uh, take effect slowly, very slowly, and the fact that we're still holding at 3.8% unemployment in the U.S. is quite extraordinary. Um,
Yeah, it is.
Even in this kind of, I mean, like this is one of those like those scenarios where let me say this. We see the data, and the data is saying something, but when you talk to people, when you talk to your friends, your family, acquaintances, coworkers, the feeling on the ground level is different. The
Mhm.
sentiment on the ground level is different. So like, and it's not something new. It's been happening, I think, pretty much all of this year, I think, really. Um, people have been more downbeat. People are having a harder time maybe getting jobs. Maybe people are having a harder time getting raises. People obviously have to contend with an increase in living costs. We've seen a massive rise in unaffordability for things like housing. We've seen massive costs to just being able to afford a car, right? I mean, I'm not a big fan of taking on loans and leasing, but people do, and that's gotten a lot more expensive the last 2 years, right? Significantly more expensive. So I feel like we're in that scenario where the situation on the ground is very different to what the overall 1,000 mile view from the sky of data.
No, that's a really good point because obviously, especially like the cost of food, the cost of rent, all going up, and you see these numbers, and there is kind of that disparity on the feeling of what people are experiencing on the street as opposed to what the economic numbers are saying. So even if the economy is saying one thing, it doesn't necessarily mean that just because these payrolls they say went up, I can tell you I didn't get any raise. I'm still waiting for that. I guess that's still in the works, right? But yeah, let's go ahead and take a look here at earnings for this week. We're getting some questions come in. That's great. Keep them coming, guys. They're spectacular. So let's see. We've got some big names coming in this week. Obviously, McDonald's before the opening on Monday. That should be a big one. Pfizer, another big pharma company, and then everybody's favorite, AMD, right here on Tuesday after the close. We've got some, looks like we've got some petroleum. We've got BP on Tuesday, marathons down there. Let's see what else in the healthcare sector. We've got CVS, one of the bigger ones. Kraft Heinz going to be a big one as well. Let me see here. PayPal, yeah, we're not going to talk about that, but the bigger one is going to be Thursday, and that's going to be Apple after the close. That's the big one. Of course, there are other names. We've got Shopify, Eli Lilly, definitely some big ones there. ConocoPhillips down here at the bottom. So yeah, we got a lot of big names reporting, but I think Apple has to be the biggest one here on Thursday after the close. That's going to make a big impact if you ask me on Friday when the market opens up.
Yeah, you really covered quite a few there. The big ones, you're right. For me, personally, McDonald's before open,
Yep.
just gonna give us an idea as to consumer staples, food stuff. We've got Pfizer again, pharma. I think that stock is so absolutely brutalized. It's like it doesn't even matter what the earnings are like. We've got industrials like Caterpillar, right? Gonna give us an idea how the industrial manufacturing, or I would say the that sector is doing. We got AMD, of course, like you said, the biggest one. That's going to be, I know, even for elite members, that's a really big one. Everyone's going to be watching that. We have PayPal, which I really have no comment on. Roku, Airbnb is another one. I think that's going to be a little bit interesting to see how that stuff is going in this kind of economy as we were speaking. Uh, Apple. Apple is, like you said, is that's the biggest. That's going to be the golden child this week. Really see how that's going to go, and yeah, it's going to be quite something.
Definitely. Yeah, definitely a lot of big names reporting. So definitely keep an eye on that. But yeah, Apple's going to be the big one. Let's just be honest. All right. So Dylan says he would like us to take a look at UPS. And I actually had two questions come in for UPS. So UPS, another one looks like it got absolutely wrecked on earnings, way oversold here. Let's take a look there. Looks like we missed on revenue a little bit. So yeah, like Riz was talking about, if guidance is just marginal or acceptable, not spectacular, the market is just punishing that right now. Even though EPS was, a bit of a beat here, not a massive beat, only 2.86%, but still, they beat their earnings per share. But yeah, revenue was down a smidge, a mere $300 million. And that was enough to just absolutely tank the stock. So, Riz, what are your thoughts on UPS here? I mean, it definitely looks like a possible place where if people wanted to try and knife catch, you could do that. I wouldn't necessarily go full bore on this one, but, UPS, pretty solid company. People still need stuff shipped.
Yeah, yeah. The reason they dropped it, they're anticipating a weakness in deliveries and shipments for the holiday season. We know the holiday season is the biggest I would say volume environment, right? For all logistics shipping companies, as per common sense. But they indicated there's that potential. They essentially decreased their guidance for that. So that's where that big sell-off is, even after this big pullback. I think it's not going anywhere. I think we've seen a too much of an overreaction. It's oversold. I can't tell if people are gonna want to average down here. I can't tell them, to average down or take a position. If you don't have a position, I would consider taking one. But if you already have one, you can consider averaging in if, of course, you're not overdone on the position already. Like you don't want to have too much of an exposure to just one single stock, right? So from a portfolio management position, I can't tell people what to do, but from a entry standpoint, I think it's a great entry at this level, great opportunity if someone has the stones for it.
Yeah, we had a couple members saying that they were in full position. They can't really justify averaging in, but yeah, you don't want to go too heavy and too hard on one stock in one place, all at once. It definitely is not a good way to do it. It's a good way to lose a lot of money if things don't go your way. So definitely be careful with that. Don't go too crazy as far as averaging down and things like that. If you got a full position and you have confidence and conviction in it, hang tough. Expand your time horizon and you should do okay. Going to get to Abhishek's question a little later because I think that'll be a good one to end on. Keely wants to know about a long-term potential hold on Raytheon RTX, obviously a defense company, looking like they're kind of bouncing up here. Looks like earnings were good, revenue's good. Wow, big surprise. We've got two different wars that the United States is funding, and this defense contractor had higher revenue. I can't imagine why that might be. But as far as a long-term hold is concerned, let's kind of zoom out here a little bit. Obviously, Raytheon, not a huge mover. I mean, it definitely goes up and down, and we're seeing a very nice uptrend now. For a long-term hold, Riz, do you feel like this might be a decent entry?
Yeah, this is definitely a bullish setup. Very bullish, of course, with the current environment as well. That's why we saw this pop. But I feel like yeah, it definitely has upside. Just keep in mind that I know, Keely, you said for long term, but just keep in mind that from a technical standpoint, it is getting kind of close to overbought there. So maybe you want to see, okay, if it can hold this 79, 78 level, and then consider an entry. But just be aware. Again, if it's for long term, you don't need to worry about being too precise or meticulous with that entry there.
Yeah, for sure. Very good point. Okay, I got to scroll through. We were having just some random chat about stuff that you guys could see on the last slide. I'll have to see if I can take that out for the recording. Oh, we've got a dirty word here. Z wants to know what we think of Palantir's earnings, or Palantir, PLTR. Oh, that's just a dirty, dirty word here. Okay, let's see. Looks like they are estimating about a nickel per share on EPS. Let's see, last time looks like they got that about. So what do you think on this one, Riz? Obviously, we have a history with this ticker. It looks pretty beat down, and I would, wager to say a little bit undervalued. But Riz, what are your thoughts on these earnings coming up?
Yeah, no, not my favorite stock for many reasons. So this company, as we know, is it's a bit of an obscure company, meaning it's about data, and also it's also in the defense industry as well. Um, and ultimately, from a technical standpoint, yeah, this 15 level is pretty good from a support area, 15 and 14, 14 being the ideal support there. But from earnings are a toss-up, right? Earnings are gonna be a coin toss. I think they'll probably do okay, but who knows at this point? And I feel like this company uh still doesn't make a profit, right? It's a growth stock. It doesn't make, it's not profitable. It's pure growth. In the past, we've seen a lot of selling from insiders in Palantir. It used to be like a what, $28-$30 stock, halved, even went up as high as what, 40?
40 some. Yeah, let's see
Uh,
here.
2021, right? The crazy fiasco of 2021. Back in
45,
the day.
45 to topped out at.
Wow, yeah, back in the day, right? So look at it, 15, just based on that, that's not, you can't just be like, oh, it was 45, so at 15, it's a massive steal. No, not quite. 45, 40, 30 even, it was a bit overdone. Even now, I think it's definitely a better buy for sure. But I'm not a fan. I'm not a fan of the stock from a technical standpoint. It's decent, but from a fundamental standpoint, from kind of what it does, nah.
Fair enough. Fair enough. Now, I did get a question from one of our members here. Wants us to take a look at SQ. He feel like it's been unfairly beaten down, and considering opening up a long position, let's take a look at SQ. So yeah, SQ has been absolutely wrecked here as of late. Let's see. Let's zoom that out. Definitely taken a beating here from when it was riding high in the 2021s. Quite a bit of a sell-off here on SQ. Feels like a little bit of a dangerous play as far as a long is concerned. But Riz, what are your feelings here? Obviously, we got earnings coming up on Thursday after the close.
Yeah, if you could adjust the scale again to really kind of get an idea as to the and if you can zoom in to 2023, let's just get an idea. Look at the massive volatility. This one's a very volatile stock. We know that it's taken a beating. I'm not too big a fan of it, of this company. I know some people are in elite, and that's fine. But I feel like right now it's definitely a potential for an entry. The only thing is we got earnings in November, right? Can't remember what day it is, but
Thursday after the close. It's
Thursday.
the second.
Yeah. So start of November, you got Thursday, same day as Apple, I believe. So uh yeah, it's good. Again, like I said, we don't know how that's going to go, but based on past 2 quarters, they've done decent. Definitely beaten down, as you can see with the RSI also getting oversold there. Not bad entry for maybe a starter position, if you feel comfortable with it or if you're bullish on the stock.
Yeah, fair enough. I mean, obviously, it's gosh, it's lost half of its value this year. Just a rough estimate here from February. We're sitting right around, 80 something, mid to high 80s, and then we're now at 40. So I mean, math on stream is hard, but I'm pretty confident that's right around 50%. And it's definitely taken a bit of a hit, to say the least. Oh yeah, PayPal is the same. That's another one that we all love to talk about here. Yeah, PayPal also getting beat pretty hard. If we zoom out on this one, obviously PayPal used to be a bit higher here at the 300s and now is down in the 50s. So yeah, PayPal getting absolutely smashed too. Oops, let me change that scale. There we go. And yeah, if you're holding PayPal, obviously we've got earnings on Wednesday after the close. So yeah, just keeps getting ripped apart. You're not wrong on that, Joss. I know that wasn't really a question, but yeah, we've had several of these types of stocks just get absolutely slaughtered this year and the year before. And yeah, it's just kind of frustrating, especially if you were holding those in the past.
Yeah, I wouldn't see any reason why anyone would continue to be holding those, but yeah, 2021 was such a fuckery of a year where it doesn't matter. Like it could be a complete dog shit company and it would just be going absolutely bonkers, right? Just for the fuck of it. So anytime someone talks about what price was 2021, it just wipe it out of memory. It just doesn't matter. It's like it didn't even exist because it's pointless.
Yep.
It's pointless, right? You can't use that in historical data. Yeah, it did happen, but when you want to look at the reality, especially in an environment where cost of borrowing is this high, rates are this high, you got a dwindling economy, you got lack of funding, you have more tightened risk in the markets and the economy. Well, this is what happens to these companies.
There you have it. I mean, that pretty much says it all. Let's go back to the S&P 500 here to close things out. Obviously, Riz, we talked about, global instability and things like that. Obviously, we've got some big catalysts this week with the interest rate decision. Then, of course, payrolls and job numbers coming in. Yeah, there's a lot going on. And it is definitely a very volatile time. And so, Riz, if you could give just like one piece of advice to people right now on how to, kind of survive this time, what would it be?
Yeah, having a hedge, cash. We've hedged actively in over the last months here and there, and we've done well with that. But more than anything, the most, I would say, easiest hedge, and ability to shelter yourself and decrease the damage on your portfolio with this precipitous drop has been cash, has been to hold cash. And I've been guiding elite members, even those outside of elite, on social media. Look, maybe increase that cash position just because everything is hunky-dory, back in August and July, doesn't mean it's going to stay that way the rest of the year. And I've been cautioning and cautioning and cautioning. And I've, put my money where my mouth is. I have been predominantly cash. Currently, I'm still like about 75 or so percent even now. Doesn't mean I have no position. Doesn't mean that cash is sitting there doing nothing. It's just, it's there. I'm able to generate a little bit of return on that as well, while also sheltering my account to further downside. Again, there's a lot of opportunities present, as many elite members know, with the dip buy list that I shared. I'm not saying go in and just like rush and just buy everything that's there, but pace yourself. But there's plenty of opportunities now. I like to utilize capital more so in this environment than an environment back in June or July.
Yeah, and that reminds me, we did have one more question I wanted to address. Now, of course, we're not going to show the dip buy list. That's only for elite members. And that is one of the major benefits. If you've been an elite member before, you are now, you know how valuable that is. But Abhishek was kind of asking a question. It's like, what sector should people be looking at to get in on that? And this could be just for general investing as well. If people feel like the market has bottomed out, right, and we're starting to recover, is there a sector that you would focus on more over one of the others?
Uh, Sorry, Chris. Just repeat that. Sorry.
So once the market bottoms out, right? Let's say we finally hit the bottom, and people feel like, and we're just talking general investors now, are thinking like, okay, it's starting to come back, the market's starting to recover. Is there a sector or two in particular that you would look at to start kind of investing in when that time comes?
I wouldn't say a specific sector. I mean, sector is difficult, right? We know consumer staples is one that's been really beaten down. So if whether we find a floor, when we find a floor is whatever. But the fact that we're looking at consumer staples here, the pretty much the biggest drop over the last few months, right? And I think that's going to be a big one to consider from a sector standpoint. Yeah, I'm sure there's going to be opportunities in tech and communications, which is kind of like very close. So I feel like there's opportunities there. But from a sector standpoint, it beyond that though, I feel like you want to really look at it from an individual lens. Like, what stock, apart from sector, what stock do I like? What are the fundamentals? What level is it at from a technical standpoint? And is it lastly in the right industry, like sector? Like, for example, if it's a utilities company, well, we know utilities have underperformed all year. They're just getting slaughtered. They continue to be down, as investors flock to other risk-free rate of return without having to deal with the risk that utilities present for an income, right? That's why we've seen them just linger. So, and same thing with some of the real estate companies, right? We got dividend paying companies, real estate companies that people are like, well, why would I want to risk that? I'll just go into a cash slash CD, treasury bonds, and just go 5% easy, no risk. So, it's really changed the risk reward dichotomy on its head, hence the risk premium that I talk about. But to answer your question, it's very, very individual from the stock base. Don't go solely based on a sector. There's going to be stocks in a sector that even after the market drops a little bit more, if it does, they're still going to be too overdone. Like Nvidia, as much as it's dropped a little, it's still way overdone. Even if the market bottomed here, I still will want to buy it. I wouldn't want to buy Nvidia here, right? So it's not just sector specific. You want to focus first company. It wants to bottom up. This is how I say it.
sage advice right there, to say the least. So, guys, we are closing out October here this week. We're going to be starting in November here, it looks like on Wednesday. So I would say, everybody, if you celebrate it, go have a happy Halloween, get lots of candy, enjoy yourself, enjoy the fall months. I know that's the dirty F word here, but enjoy it while you can before winter, because winter is coming, as they say. So go have a great rest of your weekend. Thank you for coming out and joining us here. As always, make sure you hit that like and subscribe button, and we'll see you in the market on Monday.